What's really good, fam? So as with much of the rest of the economically developed world over the past half decade, the South Korean housing market has been on a tear. If you live here, you've likely heard of enough friends or colleagues either celebrating or bemoaning the state of the market, depending on which side of it they're on. Either way, while there are a number of factors that Korea's market shares with other bloated housing markets around the world, like foreign investment, predatory loans from banks, and extreme dense metropolitan areas with very little space for expansion, there are some very unique aspects of Korea's market that are worth getting into. You're watching Seki들, and this is how to inflate a housing market the Korean way. Today we're going to open up conversation just by talking about Jeonse and a very popular Jeonse scheme that people use to build their portfolios. Now, we're not going to get to talking about stocks or anything in this video, but we do talk about them in others, so it should be noted that nothing we say here should be taken as financial advice. I'm just a guy, my guy. But I do a lot of research though, and I put a lot of work into this, so if you do find yourself enjoying what you're seeing, I would appreciate if you do us a solid, hit the like and subscribe buttons, and we will do our best to keep you up to date. Anyways, let's get to it. Alright, so I did write a really long-winded intro, even longer than that, and I'm just gonna skip that and go straight to the guts. Step 1. Have a property. This being the first time I'm talking about the specifics of the housing market, we're gonna assume that the theoretical person in this particular scheme that we're talking about already has one fully paid property in their name. 2. Put that property up for Jeonse. Now this is another way of saying put it up for rent, but using a very uniquely Korean style of rent agreement, which I'll explain quickly right now. In short, Jeonse is an agreement made between a tenant and landlord in which the tenant provides the landlord with a large lump sum deposit at the beginning of the contract. Unlike standard deposits, the Jeonse money is meant to cover all rent payments over the course of their stay. Upon completion of the contract, the landlord must return the total sum of the deposit back to the tenant. Thus, the tenant theoretically doesn't spend any money to live in the dwelling, and the landlord doesn't have to worry about not getting paid rent because all of the money is paid up front. From this vantage point, it's pretty win-win, but it naturally brings up the question, how does the landlord make any money off this? Well, honestly, that's up to them. So, for example, if the landlord puts up their apartment for Jeonse at a deposit of 600 million won, which is the average rate of Jeonse for a 32-pyong apartment in the Changandong area at the moment. I just chose that at random, it's not like representative of the whole country. Anyway, if they put that 600 million won into a Yegum account of 2.5% for 2 years compounded annually, they'll get a payout of about 30 million after returning the money to the renter at the end of the contract. It's a small return that comes out to only about 1,280,000 per month, but that's why, realistically, a smart landlord with that amount of money wouldn't put it into a term deposit savings account. In fact, if this is all that landlords did with Jeonse money, I really don't think it would be too bad for the housing market or the country's economic stability in a general sense. And as we go on, maybe you'll be able to see why. Strictly following those strategies, Jeonse looks like a great deal for all sides because the tenant gets all the money that they gave back and the landlord gets a guaranteed return by eliminating the potential for late or unmade payments. But like I said, this is not what a savvy landlord would be keen to do because Jeonse is at its core an interest-free loan. If the contract is 2 years, the Jeonse payment is a loan and the tenant lives in the collateral. If the landlord can't pay the tenant back at the end of the contract, they're forced to sell the unit and give the tenant a percentage of the home's value, but that's why we have step 3. You list the unit like half a year before the contract is set to end, and you use the next Jeonse tenant's deposit to pay back the last one. If possible, increase the Jeonse price to increase the size of the loan, and also take a little bit of a profit from that. That way, the former renter gets their money back and the new renter's deposit is covered and you get to keep a little on the top if you're able to increase the loan. Now as for the initial one, invest that as you wish. Maybe you put in the stock market and compound it with dividends, maybe you provide some under-the-table microloans and stack profits that way, or as has become very common practice, you move on to step 4. Buy another property, rinse back to step 1, and repeat. Ultimately, that first Jeonse loan is an interest-free key that gives the landlord the ability to expand their real estate equity by basically just shuffling around paper. Any and all of the subsequent real estate purchases build their RE portfolio and allow them either cash flow through rentals or returns through sales. As they increase the Jeonse loans, they might be able to pocket a little bit on the side, further increasing their returns. Given the possibilities, it's no surprise that real estate continues to be one of the most popular investment vehicles for Koreans in this country. Now, I do feel like I just dropped a buttload of info here in 5 minutes, so let me summarize the scheme really quick and set us up for the next video where I'll get into the inherent weaknesses with this model. Step 1. Own a residential property. Ideally an apartment or a well-placed office style. For the sake of simplicity, we're gonna start with the base assumption that the landlord already owns the property in full, or in other words, they just don't themselves have any loans on the house. Also, I just said office style. Office styles refer to single freestanding residential buildings with business space on the first 2 floors and none of the amenities often found in apartment complexes like playgrounds, swimming pools, health centers, all that. Alright, step 2. You put the property up for a Jeonse loan. Step 3. At the end of the first contract, put the apartment back up for Jeonse at a higher price if possible. Finally, step 4, or it could be step 2.5 depending on your timing, put that Jeonse loan to work by acquiring a new property and putting that up for a Jeonse loan as well, and ultimately you just rinse and repeat until you're satisfied with your portfolio and you feel you're stretched enough. At the end of all of this, if you decide to push it that far, you'll have yourself a mini real estate empire. Really quick though, I want to be clear that this is not just some bullshit that I'm making up. Like, there are multiple YouTube channels, blogs, and books that provide these very no-nonsense instructions for setting up a real estate portfolio in Korea. Personally, I'm not looking to out anyone or any particular channel, but just search like 부동산 공부 or 부동산 투자 and you'll quickly find hundreds of channels and hundreds of videos doing just that. What's more is that over the past half decade, the overall cost to borrow from banks has been at record lows, meaning that for many first-time buyers, it really hasn't been too difficult to get the ball rolling on their first property. In the next video on this topic, I'm actually going to talk about 갭투자, or how the low interest rates enabled wealth building through real estate for the past half decade and why that worries me now. For now though, this is where we're going to stop. The most important thing that I hope you understand from this video is that Jeonse, the uniquely Korean style of replacing monthly rents with a lump sum loan, is far more than just a rental scheme. Many enterprising investors across the country have developed methods of building personal real estate wealth by combining the Jeonse system with the low interest rates that we've been seeing. The issues? There are many, and I might actually make this into a series where I talk about them, but in the interest of saving you time, we'll get to those later. If you do want to see it, let me know, because obviously the more I know about what you want to see, the more I'll actually make it. Anyways, that's it for me today. If you're still here, I really appreciate you sticking with us through this video and keeping up with the content that I'm putting out. Investments right now are getting absolutely demolished across the board, but with any luck, you'll have some liquidity to invest in the short term, or a safety net to hold you over if inflation is really pressing you on essentials. It's always love from us here at Sekidid. Oh, and feel free to drop whatever projects you got going on, whether it's YouTube, SoundCloud, a blog, whatever. Just drop it in the comment section. Let's get it, fam.